For Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
All right.
Hello,
Happy
Bruce.
Monday to you.
Yes, sir. Yes, sir. It
Only
is a
5
happy
more
Monday.
days till the weekend, my friend.
I don't know. I don't worry about weekends so much, except it is football season, so I like the weekends for that.
Well, it's because you and I tend to be working a lot 7 days a week, right? There is no weekends for us.
Absolutely.
Hey,
But
let's get started on this. We got some good stuff to give out to everybody.
yeah, absolutely. I'm excited. I'm reading a lot of reports about inflation. And so I've got a report in front of me. I won't share it, but it's personal consumption expenditures that we're down to 2.2% inflation on that number. And core inflation is 2.6, 2.7. So, it looks like we're on our way down to where the Fed is really going to get more aggressive on cutting rates. What are your thoughts on that?
Well, I think that's definitely in our future. I think that it's inevitable that we're going to get some rate cuts. I think that once the shelter reports come in for housing, you're going to see, since that's a lagging indicator, you're going to see that we're really closer to that 2.2. I think we could potentially see another cut this year, but I think definitely the first quarter of next year, we're going to see another rate cut with the Fed. So I think it's inevitable that it's going to happen. Things are going in the right direction. And I think that there is, a bright future.
Bruce, I never heard anybody use the term shelter report before. What is that one?
Well, shelter is an indicator of housing. So you have to remember that housing has been eliminated from your indicators for inflation. So housing and fuel and food are not included in inflation.
Things
Right?
that we actually have to buy, right?
The things that are most important to us.
Yeah.
But our shelter reports will give us an indication as to the housing availability for people. And since it's a lagging report, we think that once that comes in, that the Fed's going to see that the numbers really are in alignment for another Fed cut. But you have to remember, what did I tell you before the Fed cut the Fed rate last time?
Well, I remember we had that conversation, and I agreed with you that it was possible that rates were actually going to go up after the Fed rate cut happened.
Yeah. So I'll tell you what, I want to show a chart here. If we can pull up this chart.
Yeah, let's do that.
All right. So let's look at, tell me when it's up.
I got you. You're shared.
All right. So let's look at, this is more of a long-term approach on here, but let's just look at this. So there was your Fed cut right there. And look, and this is the bond market. Okay. We want bonds to be up, not to be down. This was when we had our worst rates. We're back in here. You would have seen close to 8%, but look where rates are just before the Fed cut the rates. And then the bond market dipped back down. Now, today and Friday weren't bad days. We look like we recovered a little bit, but we've lost ground right from here to here, which is about 50 basis points, maybe even more than 50 basis points, which means 50 basis points cost a client a half a point extra in points to get the same rate.
Right.
So this is what happened after the Fed cut the Fed rate. Now we have to understand why. So you have to understand, why does the Fed cut the Fed rate? What is the purpose of that?
Well, that's to make money cheaper for people to buy things, generally to drive the economy, right?
And what does that do for the market?
What does that do for the market? That makes more demand, right? More demand usually means higher prices.
Right. So, what the Fed's doing ultimately is they're dropping the rate to stimulate the economy.
Correct.
Right. So when you drop the rate, more people have more disposable income. They can spend more money. Remember, we need money to move. That's why they call money currency. If it's not moving, nobody makes any money. It's got
Right.
to keep moving. So when they drop the Fed rate, then it stimulates the economy. Now, when you stimulate the economy, what do you think is going to happen to the stock market?
Yeah, it goes up.
It's
Yeah.
going to go up. It's going to
Mhm.
get better. But the stocks are where institutional money shifts to when the market is good. Bonds are where they go to for a safe haven when the market is uncertain.
Right.
So they're going to go out of bonds and into stocks. It's going to affect the bond market. It's going to go down instead of going up, and rates could potentially go up. Now, if we go back to that chart and we look at that, we're not, these weren't horrible, but it is a half a point to the discount point, which could
Yeah.
mean an eighth to a quarter in interest rate all day long. Now, do I think we'll bounce back? I think we'll bounce back, and I think we'll continue to get better and better and better. But you have to understand that just because the Fed cuts the Fed rate doesn't mean that interest rates drop by a half a point. They actually went up a little bit since the Fed cut.
Gotcha. Gotcha. Hey,
Now, if
we always talk in numbers, right? Because obviously we're talking about numbers, but when we look at what what's going on in the marketplace, right? How much does a quarter point or a half a point really impact somebody?
Well, I'll tell you what, it's funny you ask. I didn't do a quarter point, but it wasn't long ago when interest rates were 7. Let's just say 2 months ago, 2.5 months ago, close
Okay.
to 7%. And let's say today you could get 5.5 on a $350,000 loan. That's about $350 a month.
Okay.
So if $350 a month is important to you, then today's rates are going to be much more attractive than they were when they were closer to 7%.
So I just
So
did the math. I just did the math real quick on a quarter point, just so you know. And so at 675, 100,000 cost you 648, and at 7% it's 665. So it's about $17 per 100,000, right?
yeah, per
For a
quarter
quarter
point.
for a quarter point.
Yeah.
So a quarter point up or down is not impactful, but when you start getting it, and that's what I think people get really worried about. It's like, hey, I got an eighth of a point better over here, or I've got a quarter point better over there. And really that's a pretty non-event, especially when you look at your overall costs, like cost of origination and funding and all those kind of fees, right? That a lot of people don't look at. So I always warn people about looking at the rates online, because when you look at the rates online, there's always a lot of
They don't look like advertisements, but they really are.
they are, I know. And then you end up, by the time
That
you
looks
talk to
like
them,
a
it's like,
quote to me.
yeah, well, that's not really what it is. Or, oh yeah, you can get that, but and
Let's look
so
quickly at what we've got coming up this week. All right.
yeah,
So on the screen, I put on all the events that are going on with the Fed this week. So some of
I
them
got
are
it.
moderate and some of them are high impact, but you got jobs out this week, earnings reports coming out, all high, farm payroll coming out, so or non-farm. So there's a lot of events happening this week that can affect interest rates positively or negatively. And then if we
Mhm.
look back and we see what is the market doing right now, well, it's -6. Now remember, this is the bond market. We want this to be positive for interest rates, not negative. So we've
Right.
started off the day. That's relatively flat. I mean, that's not anything to concern yourself about. But days when you see 25 basis points, that's a quarter point to the discount point. That cost you $250 per $100,000. So, it gets to be
Two hundred fifty
expensive.
thousand dollars of one-time cost, not monthly costs.
Correct. If you're taking
Yeah.
it, if you're going to take it in the form of a discount point, which we discussed earlier, that discounts aren't discounts to you.
Uh-huh. Right. Yeah. It's typical, government thing, right?
It's the opposite.
Let's
Yeah.
call something what it isn't. Yep. I got
That's
it.
right. That's right. So
All
I
right.
didn't
Well,
make up
very
the
good.
terms. I'm just sharing the information.
Hey,
So
Bruce, we are quickly approaching what I think is going to be the single biggest week in mortgage rates in 2 years. And that is in about a month and 5 days, we're going to have two things happen almost simultaneously. We're going to have an election,
yep,
and we're going to have another Fed meeting,
right.
right? On the 5th,
That's
I
right.
think it is. So those two things, I think, and I don't know that it matters who wins the election. It does matter who wins the election, but it doesn't matter to what I'm going to say is the relief is going to be there that, okay, it's over. We know what's going on, and we're just going to move forward from that. So,
Yeah, I agree. I agree. I think regardless of who gets in the office, I think that inflation is becoming a little bit more controllable, and that should drop interest rates a little bit. So if you're looking to refinance, now might be a good time to look at refinancing. But I'll tell you, 50% of the people that I talk to right now about refinancing, I'm putting them on a wait list. So if you want a lender that's honest about whether you should or shouldn't, because I guarantee you, if you call your bank or you go online to any lender, they're going to go, do it right now, do it
yeah,
right
yeah,
now. Okay.
absolutely.
But that may be the right thing for you to do, but let's analyze that and know what we should do. Purchasing a home right now, interest rates are about 1.25 better than they were a month ago. So, I
Yeah,
mean, listen, you know what they say, pigs get fat and hogs get slaughtered. Don't be greedy. It never pays off to be greedy. And I can't time the market, and I watch it like a hawk. So I guarantee you can't time it either.
yeah, absolutely, absolutely. Well, Bruce, it was a busy weekend. It's going to be a busy week. I wish you well this week, and
Same to
I'm sure
you.
we're talking a lot because we got a couple of buyers we're working
Yep. If
together
you
with.
need help from Tom or I, we're always here to help you, whether you are a competitor or you are a business partner, you just have questions about the market, you need some
Absolutely.
help. Tom's looking to hire some great people. I'm looking to hire some great people. So if you have the talent in our industry, please let Tom and I know. We would love to talk to you.
Yeah, Bruce, you have a great day, man. I will talk to you soon.
Yep. Thanks.